Markets move in swings and so does your P&L. It's not about how much money you make, it's about how much you keep. So in today's video, I am going to cover what I do personally to lock in some gains and how you can start doing that as of your next trade. What is going on, everyone? Welcome back to my channel. Good to be back. October has been a bit of a wild one. Volatility has kicked in, which is very good to see. I'm going to cover on dollar yen what I personally do, what I look out for before taking profits off of the table, so scaling out of a position, and then also scaling back in, what I look for, what you should be looking for to add that risk that you've taken off back on the table to obviously maximize your risk reward on the positions that you take in. So without further ado, dollar yen, let's go. Right, so dollar yen, several reasons for the short position. We understand 145 being such an important handle for the pair, as well as the fundamental reason of the Bank of Japan looking to intervene in the value of the yen. The yen has been smashed over the past few months, and one of the reasons why we are trading where we are is that interest rate differential between the US and Japan, putting a lot of pressure on Japanese exporters. So that being said, dollar yen, such a massive level of 145. I favored a short position given the fact that dollar has been on the back foot with there being rumors of a Fed pivot. And then you also had the Bank of Japan giving a slight hint that they're going to be intervening, which they haven't yet. It's going to be very interesting when they do. But I definitely want to be sure on the yen crosses as and when that happens. So technical reason for entering, we obviously had that reversal out of the high, right? And that sparked my initial interest, right? That sparked my initial interest to go ahead and take that short position on dollar yen, right? There again, I have a rule of thumb. When a previous high and low is broken, I'm going to lock in some gains. So I'm going to use the highlighter for this. Once that low and this low was broken with this move to the downside, I had to lock in some gains. And there again, looking at my fib area on the Fibonacci, we hit that minus 27. So it's not always about where we want a trade or a currency pair to go. It is more so what it's actually trying to tell us. So we always got to ask ourselves, what is the market trying to tell us? So for myself right now, looking on the higher time frames, 2 hour, 4 hour, right? I do favor this area where we're trading right now, another area of interest, right? I do understand that the prior trading day is extremely bearish. And there again, I covered this morning on my London sessions that I do live every morning. It is something that you want to trade in line with. The prior trading day is extremely important to scaling into a trade. So looking at that on the 4 hour and the 2 hour, I do like where price is. This is an area of value. This then tells me that should I wish to ride this wave once again to the downside, there is scaling in opportunities to then do so. You want to go ahead and tuck your stops 20 or 30 pips above where you're re-adding the risk that you took off yesterday, right? And you want to then look to run that back to the lows. Should we obviously get that correction from where we're trading right now, you can go ahead, let's delete our fib for a second. You can go ahead and redraw your fib from that previous wave high to the low. You can see that we have coming back into an area of interest. Right, as a trader, we want to be selling high, and that obviously gives us higher probabilities when doing so. So if we were to run back into the lows, you got another 4.22 to 1 risk reward on that scale in. So the profits that to reiterate that, money that I had taken off on the initial short, the risk I had taken off, those lot sizes, I can put back on the move back to the downside. And this is perfect evidence that the market can turn on you at any minute, right? We need to trade what the market is showing us, not what we actually want to see. There's a very big difference between the two. So keep that in mind. When the market breaks a previous high and low, you want to lock in as much gains as you possibly can to then possibly add that risk back onto the original trade should the narrative and the fundamental reasoning behind the position stay the same. But that's it for dollar yen. Possibly looking if this 144.500 handle holds, adding some risk to that, and also monitoring dollar CAD possibly for a move to the downside should this level of 136 hold. So the 136 handle on dollar CAD and 144.500 on dollar yen. But that's it for me. today's lesson. Remove some money off the table. It's not about how much money you make. It's about how much you keep. Focus on locking in those gains and slowly but surely continuing to do so. Hope you guys enjoyed the video. Like, share, comment, and subscribe. And I'll see you on the next one. Take care. Bye-bye.